Hi there, good morning and welcome to the market right here on ET Now with me, Avandabash, as well as Anisha Jain. Nikunj Dalmia joining in just a bit. But let's take stock then of the global markets first up before, of course, we talk about that stellar run that we witnessed on D Street just yesterday at those life highs. Well, do remember that the US markets were closed on account of the President's Day holiday, but you do have the US futures, which are indicating that after a long weekend, it is looking quite steady. So that's really what we have. But for the Asian markets, you do have China as well. It's a long holiday, but it's some upbeat data coming in across the Hong Kong. You do have the markets which are on the back foot. You do have the People Bank of China as well that has held the key policy rate steady, and they've said that they're holding the rate unchanged at about 2.5%. The Hong Kong markets, though, pretty flat with a slight negative bias. Nikkei as well, which was at record distance of striking distance of a record high on Friday's trading session, is looking a little bit somber. You've also got Kospi, Topics, etc., all which are on the back foot. But we're awaiting some retail earnings on Wall Street, and more importantly, you've got the dollar, which is looking a bit subdued. The 10-year yield at about 4.32%. So that pretty much sums up the rest of the global markets. But I think the more interesting part, Anisha, is what happened on D Street.
Oh, well, yes, that's where all the action was. We clearly outperformed the rest of the globe yesterday. It was a record high level that we touched, and we were just that kissing distance away from that 22,200 mark. Yes, we closed off the highs, but nonetheless, it was a good rally that we had at our hands towards the second half of the trading session. It was all thanks to ICICI Bank and Reliance Industries that contributed more than half of the Nifty gain. So a good amount of pull coming in from ICICI Bank yesterday. The mid caps and small caps continued to be in the green. So for fifth session on the trot, they continued to gain as well. And Nifty Bank was holding up in the green as well. Of course, the major part of the traction was coming in yesterday from the private banking names. But still, we were watching out for what was happening in individual stocks, because Nifty Pharma, for instance, hit the record high level. Autos also continued a good move, led by the move that we saw in Bajaj Auto, etc. Coal India, yes, by the end of the trading session, slipped by 5% on account of those con call highlights. But nonetheless, the street might see a bit of a turnaround today, given the fact that brokerages have come out a lot more positive than what the street feared. It's a lot of action, but I think it will be all about the banking names today as well. Lots of news flow last evening on Kotak Bank, HDFC.
Absolutely, and it's HDFC Bank actually that we're looking at quite closely. Shashidhar Jagdishan, the Managing Director and CEO of HDFC Bank, had a lot to talk about with respect to the merger, with respect to the way ahead as well. And they said that as of now, the bank is in a period of transition, but they did acknowledge that as of now, they have always been consistent when it comes to their overall bottom line. Do remember there will perhaps be lots of questions from investors owing to the kind of underperformance that we have seen from HDFC Bank off late. So the management saying that right now slow and steady is the way. They're saying we're happy to go slow if any disruption arises, but we're not going to compromise our margins or risk. By the way, just a quick word on Paytm. They did speak about how the company has a great tech platform and they will continue to experiment. They've partnered with the company to harness their tech platforms. In fact, let's listen in then to the view from Shashidhar Jagdishan, the MD and CEO at HDFC Bank.
So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth, and that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory. They do have a great tech platform, and that is what we have a partnership which sort of harnesses that, and it's not a big thing. As I said, these are experiments that we are happy to sort of continue as long as we maintain control of the regulatory norms, etc.
Okay, let's also listen into the market view coming in from the FIIs. We spoke yesterday with Vikas Prasad, the portfolio manager, Asia Equities at M&G Investments, and Deepika Mundra as well from the team. Listen into what they had to tell about India and the equity markets.
If you look at the move India has had, in absolute terms, terms relative to other markets, people think, well, maybe we can find better value elsewhere. Our view is that that is not the case. I think this is a great time to be investing in India. In fact, over the last 2 years, we have increased our allocation to India by more than any other market, except for Japan and Greater China. Those three have been large allocations for us. We see a lot of opportunities beyond the index. You were just talking about the action is outside the index. We see the same thing. The leaders of yesterday are not the leaders of today. Today's leaders probably won't be the leaders of tomorrow. There's a lot to look at in India, and so we're very excited. I think it's too much fear about valuation, and we'll come back to that, I think. Too much fear about how much things have gone up, and then too much hope that other markets will deliver better returns.
Let's talk about the construct. Now, if I look at India for next 5 years, 10 years, it stands out. I mean, India's story needs no introduction. Everybody knows that, look, this is the place you want to be in. So, because my question is that when you look at the valuation construct, investing is about buying silver, gold at the price of silver. In India, you're buying pretty much gold at the price of gold. So, where will the upside come from?
I think the upside comes through time horizon arbitrage, for one. The upside comes through doing a lot of work and having the conviction that if something goes up 20, 30, 50% or goes up 100%, that you hold on, you don't take profits, you don't sell too early. The trick in other markets is buying too early and maybe selling too late. In India, the trick is selling too early. And we've learned that over time. If you look at our portfolio broadly, we have owned the same names for months and quarters and years now. Defense is something that was just on the air. That's something that we have exposure to despite the rally. Two-wheelers and autos, some of the PSUs, we continue to hold these because we think the prospective returns continue to be high. India might be pricey in some lenses, but it's pricey because that's where the growth is. That's where the returns are. That's where the money is. And so that's why we come back to this market again and again.
So Deepika, where do you find value on the table right now? Looking at the run-up, which some of the pockets that Vikas just highlighted, it's already taken place. And there's so much fear and panic around the valuations, the steep run-up in the stock prices already. Where would you say for the next 5 years, you would say that, I'm still willing to pay this price?
Sure. So just to add to what Vikas is saying is to be patient and not to sell too early. So some of those sectors which we think will see some months of disruption, we would still continue to invest in those. These are the cyclical ones, right? Engineering and construction, commercial vehicles, cement. Few months of disruption does not disrupt the long-term story. On the other hand, we think where companies have good assets which can generate cash flows over a very long period of time, difficult to replace assets, so hotels, airports, REITs, so not necessarily all in the benchmark, but good assets which can see strong cash flow potential over the long term. Autos, we already mentioned, that's something where we are still bullish on. Two-wheelers more than four-wheelers. We see multiple themes playing out in that space, whether it is premiumization in terms of consumer choices, transition to electric, and the cyclical recovery, which is still pending since 2019. So these are the few spaces we think we're still bullish on, irrespective of where prices have gone up, and keeping valuations in mind as well.
All right, let's chat technicals then. Naresh Mirani joining in, Soni Patnaik as well is with us. And Naresh, let's get in a take from you. You had a lot of support coming in from the heavyweights yesterday as we managed to hit those record highs. And although we cooled off, do you think that the undertone of the market is looking promising?
So the bias remains positive. We've yet not seen a new all-time high on the small cap index and the mid cap index because they had made a move previously. But Nifty makes a new high. The momentum is strong. Now we are getting in support from various pockets. So ICICI Bank has come close to an all-time high. You have Reliance Industries taking lead. You have SBI which took lead. And now HDFC Bank is creating a bounce, a Kotak Mahindra bounce. If all that comes up, we go towards that 22,500 mark on the Nifty, which remains a short-term target. So overall now 21,800 should act as a base. So time to be more stock specific, but the bias remains positive.
Okay, the bias remains positive. That's a view coming in from Naresh. But let me take it to you as well, Soni, to get a sense as to what you make of the market mood right now.
Hi, good morning to all, and thank you so much for having me on the show. I think pretty much in sync with how Naresh has just explained, the bias remains positive. Undertone is quite bullish as of now, and we'd seen that Nifty was quite struggling for the past 2 odd weeks, but then it has broken out of its range. The only index that is left struggling is Bank Nifty, and we believe that Nifty is holding a support of 22,000 as of moment, and it can definitely head towards 22,300 to 22,400 in the coming days. It's just that Bank Nifty is still in that consolidation range, and Bank Nifty needs to break out above 47,000, only above which we can see a good short covering happening until 49,000 in gradual days. So I think both the indices are looking good. Nifty is definitely better placed than Bank Nifty as of the moment, but I think both the indexes will strategize for buy on declines as of the moment.
All right, the bias is looking positive. So let's find out which individual stocks you're tracking, Naresh.
So first is the buy on ICICI Bank. The stock over the last few weeks, every time it went closer to 980 to 1000, it recovered back, and now we are back to testing that 1050 levels. The long-term structure is positive, and the short-term consolidation around this 980 to 1050 mark seems to be giving a breakout indication. Once it sustains about 1050, it opens up a target price of 1150 to 1200 in the short term. Would be a range breakout, so it's a good risk-reward entry point right now. Stop loss at 1020, target price of 1150. Second is a buy on Grasim. The stock has been testing that 2180 to 2200 mark for the last few times in the last 3 weeks roughly. Multiple attempts done, and every time after the attempt it has cooled off a bit. But after these many attempts, I would expect a breakout here. So a buy at current levels, the stop loss at 2120, target price of 2400.
Okay, so that's the take coming in. Grasim as well as ICICI Bank are some of the stocks that Naresh likes. Soni, what is your list looking like?
My first pick would be in Cummins. I think Cummins has given a good breakout. It's looking quite strong on options chain as well. So keeping a stop loss of 2590, you can buy at current levels, and on any small dip around 2650 also can be bought for a target of 2700 to 2720. The other stock would be for GNFC. I think GNFC is also looking good as in it's bouncing back from its current correction that has happened. So you can buy at current levels, keeping a stop loss of 660 and target of 700 to 705. And there's a disclaimer that I'd like to share that both the calls we've recommended to our clients in terms of call option. For Cummins, we've recommended in 2700 call option, and for GNFC, it's a 700 call option.
Okay, thanks very much for taking us through all of your top recommendations. Hope you guys have taken note. Let's move right on then. Stocks to watch out for in trade, and we've got Vinny here to break it down for us. And we've handpicked GCPL, a stock that you track quite closely. Tell us a little bit more about their divestment plans and the rejig.
So absolutely, this rejig and reorganization is what they'd highlighted in their Q2 con call as well, that this is what they want to plan and do. And that is what is happening in the East Africa business. That was not doing quite well. It was in terms of negative returns that that's seen for the company as well. But in terms of even the profitability, that was not quite low as well. Margins were quite low. So they are just removing that part of the business. They're going to be divesting the East Africa operations, and that is going to be going to HKG Africa Weave. It's only a 30 crore consideration. So it's a small divestment that they're making, but it's a positive development because yes, they want to focus on their main businesses, want to improve the profitability of their other businesses. So whether you look at the US market, other African parts, as well as the parts of Kenya as well is what they will look to divest, and Middle East is what they're going to be focusing on as well. Now, what brokerages are highlighting, what analysts are saying as well, that this will actually help the company achieve that 15% EBITDA margin that they want to focus on in the next 2 years. That is something that is achievable as well. This transaction will be completed in the next couple of quarters, and overall after this, the Africa business, now the salience will fall down to 20% from currently FY23 it was 26% in terms of the total revenue. So that's what we're keeping an eye out on. In terms of impact on revenue, maybe a 70 crore impact we could see in Q4 in terms of FY24, the impact on revenue. But overall, on an annualized basis going forward, profitability of around 50 crores is what we could see an improvement. In terms of revenues, there's a bit of an impact of around 500 crores could come in terms of the sales on the annualized basis. But all in all, this is a positive move coming in sentimentally when you look at it in terms for the stock as well.
Yeah, sure. And the stock has actually done well. I mean, YTD it's up around 8% when rest of the FMCG pack, the likes of HUL, ITC are down 10-11%. So it's managed to outperform a bit. Let's see, will it add just that fillip or not? But the other one that we'll all track very closely is Whirlpool. A big transaction which is likely to happen, 24% comes to the market.
Absolutely, 24% by Whirlpool Corporation. So that's the parent company that will be looking to sell its stake in Whirlpool India. Now, this is according to agencies and reports that we're picking up. This transaction is expected to be worth around $450 million. And what is the pricing currently that they've given? The floor price is at 1,230 rupees, which is at a discount of yesterday's closing price. When you look at it, around an 8% discount is what we can see. Other than that, the deal is going to be how? That is going to be a base deal of 15%, and there's an additional green shoe option that they can look to sell of 9% as well. Whirlpool Corporation, why are they doing this also? Is because in one of the recent press releases with the earnings that highlighted that, they want to reduce their debt. They've been focusing on reducing their debt. And, by selling this stake in Whirlpool India, they will be reducing their debt. They are focusing on that. They want to deleverage their balance sheet as well. And that's the main focus. And that is why they would be looking to sell their stake. Let's not forget, Whirlpool Corporation actually holds stake through its subsidiary Whirlpool Mauritius, and they hold around 75% stake right now in Whirlpool India. So they will continue to hold minority stake, even after this. But yes, right now a sale is what we are looking at is possible. That would be coming in through block deals in Whirlpool India.
Okay, thanks very much. GCPL, Whirlpool India, Vinny, thanks for flagging off all of those details. But yes, as we highlighted, it's clearly those private sector banks that are hogging the limelight today. Kotak Bank in particular has gone through a recent rejig. This is in their management. They've now reappointed KVS Manian as the joint managing director effective 1st of March. Let's get in all of the details, talk a little bit more about the rejig and all of the appointments that have been made with respect to the management. Anurag Joshi, my colleague, is here to break it down for us. Anurag.
Kotak Mahindra Bank has named KVS Manian, currently a whole-time director at the lender, as the joint managing director. Shanti Ekambaram, another whole-time director of the bank, has been designated as the deputy managing director. Both Manian and Ekambaram's appointment will be effective from March 1. Devang Ghiwala has been appointed CFO of the bank and designated president and group CFO. The other two key appointments made by Kotak Mahindra Bank are Milind Nagnur, currently the Chief Technology Officer, who becomes the Chief Operating Officer of the bank, while Paul Parambi will be designated as the Group Chief Risk Officer at the lender. In October, Kotak Mahindra Bank had appointed Ashok Vaswani as the CEO and Managing Director to succeed Uday Kotak, who is the founder of the bank. Both Manian and Shanti Ekambaram have grown with Kotak Mahindra Bank and have been with the bank from the time when the lender was a non-banking financial company, and in 2003 had converted into a commercial bank.
Thanks very much, Anurag, for walking us through those details. Meantime, on the sidelines of the Mumbai Tech Week, Aishwarya Patil caught up with the MD and CEO of NSE, Ashish Kumar Chauhan. He spoke about the trading hours extension in the future and what exactly is in store. Listen in.
In a way, all the brokers have to agree, SEBI has to agree. So whenever they tell, we will do it. Otherwise, in GIFT City, we have 22 hours exchange working, which works on our own technology. In India itself, in India jurisdiction, we have commodities exchange is working for till 11:30 in the night. So we have some examples and other things. But as and when people feel comfortable in the stock markets, we will do it. We are not in a hurry.
But the phase one will of course be FNO.
Naturally, because that's what the rest of the world does. Because although we were the pioneers of automated trading, the rest of the world became automated later on. But they have gone for literally 24 hours trading. We have remained with 6 hours, 15 minutes trading. But that's beside the point, right?
As we speak, market touched record highs, and you've earlier forecasted for a $50 trillion market cap by 2047. Do you think we are poised to touch that and achieve that mark?
Broadly speaking, my hypothesis, which I told today also, is that the technology creates wealth, and India is now becoming a very tech center of the world, and so large part of the new wealth will be created in India. And the way things have happened over the last 10 years of using technology in all walks of life, including in governance, has, I think, in a way created an ecosystem, a confidence that we are a tech nation, right? And new wealth will be created using technology. And that's where, broadly speaking, we have already reached $4.5 trillion, $4.6 trillion of wealth using stock markets. In next 25 years, if we continue to do well, I think we are well poised to have almost a $30 trillion of GDP and $50 trillion of market capitalization.
So in the near term, from NSE's perspective, what sort of market share gains and volume growth are you targeting?
See, in a way, we are not into any competition. We are just a frontline regulator who also provides services. So wherever people want to trade, whatever they want to trade is fine. But idea is how do we provide together with, of course, our regulator also watching everything, a well-regulated, well-functioning, uninterrupted, low-cost markets. And that's what our perspective is. Today, we are now the largest exchange in the world in terms of number of trades, number of orders per day, by miles. Almost every day, we would be doing somewhere between 30 to 50% of all trades in the world, in all exchanges put together, right? So, I mean, you don't think of your market share when you are a regulator, right?
Well, yesterday at closing, it was Coal India which was coming under quite a bit of pressure, ended with a cut of around 5%, and that's because the management on their con call highlighted that there is a possibility of a production cut, plus the e-auction prices have come down very sharply, so the premium which stood at over 100% earlier has come down to 40 to 50%. However, this morning the brokerages are a bit more positive because they are reading in between the lines and saying that in terms of the long-term profitability, that still remains intact. But first up, let's listen into what the management had to say on their con call.
One company, SCCL, there is due to some land shortage initially. Now there is no issue, but around 8 to 9 million ton, we are a little bit lagging behind. That comes to around 171 million ton around right now. But we are few mines, the EC clearance is also being ended. So we are trying for 10% growth is already there to keep the momentum. 5 companies for sure it is achieving targets. In SCCL, there is an issue in initially mega projects, 2 projects, and hence, though there is a growth in that company, more than 10, 12%, 13% growth, but the target set is to achieve 197 million ton. Last year, they could achieve 162, previous year, 147. So 147, 162, that is a huge jump last year, FY23. Again, 25 million, again huge jump, but there may be some little around 10 million, 8 to 9 million gap may be there. Recently, due to the present scenario of our coal stocks at power plant and subject to demand, it is kept as 838 million ton instead of 850 next year. So we are on course to achieve this, and the preparations are going both for monsoon preparation also. In 24 monsoon, also we are working on it. Our tenders are in place, and all the arrangements to face the monsoon by May 31st will be in place, so that monsoon also there will be smooth production and dispatches, and we will try to achieve 838 million next year.
All right. In fact, let's get in a brokerage note then. We've got multiple ones like the likes of Nuvama, JM Financial, CLSA on Coal India. And Ashesha is here to walk us through what exactly they have to say. Ashesha?
Well, yes, despite muted commentary that came in from the management, one with respect to volume growth guidance for FY24 and second with respect to e-auction premiums, brokerages in fact are very positive on Coal India. First up, let's talk about CLSA, where they are maintaining their outperform stance of the stock. They have in fact gone ahead and hiked their target price to 480 from their earlier target price of 380. They say drop in e-auction premiums are likely to be offset by higher sales volumes in the coming couple of quarters. As far as valuations are concerned, brokerages believe that valuations are pretty attractive despite the run-up that we have seen in the stock over the last few months. In fact, the stock has nearly doubled in the last 1 year. Brokerages believe that valuations are demanding even at the current juncture. As far as dividend yield is concerned, it continues to remain strong at about 6 to 8%. And as far as sales mix is concerned, that too is likely to improve going forward. So clearly, brokerages are very positive on this counter. CLSA, for instance, has maintained its outperform stance on the stock, and they've gone ahead and raised their target price to 780.
Okay, so that's the take coming in on Coal India. So, in light of these, brokerage notes, Naresh, do you think the stock is poised for a rebound? I know you said 420 is the level to watch out for, but is a bounce back possible?
So not really, not expecting much of a bounce back, expecting this dip to continue or continue to face selling pressure on every rise towards that 480, 490 mark. So for now, after such a rally from 240 to 480, I would expect a consolidation between 420 to 490. So the contra trade would be to actually go short around 480, 85 levels if it bounces today.
Okay, so that's the take coming in as far as Coal India is concerned and the technical view on that. But Devin Choksi also joins us on the show. Hi Devin, good to be speaking with you. I wanted to begin by discussing Biocon with you because this morning there's a brokerage note that has come through and Jefferies has actually downgraded the stock saying that there are a lot of moving parts to this company and perhaps the risk reward is a bit unfavorable given the leverage situation as well. Is Biocon a name that you track actively and have a view on?
Yeah, good morning, Anisha. No, we don't keep, I think, active tracking on Biocon. So I think, but in general, I believe that I think the what is the observation which is felt out, I think is correct. I think that is another reason for which I think we are not tracking this company because there are multiple areas where probably I think we don't have too much of clarity in the business from this company, and that's the reason for which I think we have stayed away from it. The potential of the business, I think, has always remained high as far as I think the Biocon therapeutical segments are concerned. But somehow or other, I think we haven't seen the kind of traction which one would otherwise see from the business all so far. So that's the reason for which I think we have stayed away from covering this particular stock in the portfolios.
Okay, fair enough. Meantime, Deven, morning, you've got the management of HDFC Bank clearly articulating their preference for earnings growth over loan growth or market share. Anything that stood out from you, according to you, from the management of HDFC Bank?
So yeah, Aman, good morning. Well, I believe that I think that's the right thing to do. Given the size of the bank, I think they need to be extra careful about expanding the book in hurry. And that is what I think this management has confirmed that they would not be expanding the book in hurry. They would be managing their liability side in a systematic manner and probably I think want to focus more on having a low cost deposit and on the other side the loan growth which is more on the secured side than on the unsecured side. That is what I think we gather from the underlying tone of the commentary that is coming out. What probably I think we haven't got like more, we should have got more clarity about the kind of fintech use in coming period. That clarity probably is not forthcoming. Though I think the assurance is there about creating a significantly large amount of digital interfaces for acquiring the customer as well as for disbursing the loan, which is a cost-effective medium. That is what has been, I think, promised. But I don't see, I think, too many things coming up on the fintech side. So that is one area which one will have to look around for.
Sure, point taken. But since we are keeping it with the banking sector, I wanted to bring in other private banks into the discussion as well. ICICI Bank has been outperforming. Do you think that will continue the way? And let me also add Kotak Mahindra Bank and Federal Bank, wherein these management rejigs have happened. While it's positive for Kotak Mahindra Bank because the clarity has emerged, do you think Federal Bank can react negatively because KVS Manian was a front runner for leading that bank too? Devin, the question is for you.
Yeah, sure. I think I'm not too sure about having the Federal Bank aspect and the TVS Union moving into that particular bank. Because all said and done, even if I think there's some high level banker moving into this particular bank, ultimately I think for growth in the business, you will require the strong balance sheet. And I believe that I think it makes sense for anybody to stay with likes of Kotak where the promises are, I think, far bigger than anything else as far as I think the balance sheet strength is concerned. So from that perspective, I would still prefer to see I think the Kotak Bank as a preference from the investor's point of view. This bank has been cautious, like HDFC, in expanding the loan book. They've been measuring their growth as far as I think the activity goes on the expansion side, be it on the corporate lending side, be it on the personal lending side. I think they've been measuring their growth, so that is a good thing to do. Maybe as I put across the point, the similar situation out here, whether I think visibility on the fintech side for expanding the distribution reach is coming forth. I don't think that I think it is immediately seen by me at least. So from that perspective, I think that is a miss. I think if at all, I think one want to call it as. But otherwise, I think from the business side, I buy the point that I think they are more prudent in lending and probably I think they are systematically expanding the book. ICICI similarly, I think hasn't been showing aggression beyond the point. On the contrary, I think they have been managing the balance part of the business by way of acquiring the deposit at a cheaper cost, and at the same time, I think expanding the book on the other side in a balanced portfolio, be it corporate, SME, MSME, and the retail book. I think all of them are being expanded in a systematic in a balanced portfolio. So one would tend to buy the argument for buying into the ICICI Bank, given the visibility of growth rate of around 20% on a cumulative basis for at least next 3 years or so.
Okay, stay with us. Let's put the spotlight then on Deepak Fertilizers. Remember, they've entered into a long-term agreement with a Norwegian oil and gas sector giant, Equinor, for a long-term supply of LNG. What are the contours of this deal? What exactly are the implications for Deepak Fertilizers? Sharad is here to break it down for us. Sharad?
Well, important development coming in for Deepak Fertilizers as the company has signed a 15-year LNG contract with Equinor, which is a Norwegian giant company. And importantly, if you look at it, there will be an annual supply of almost 0.65 million tons over the next 15 years, and this is starting from 2026. Now, apart from this also, this will be an end-to-end solutions tie-ups, and also it will be helping the company's various product segments. And as per analysts, the agreement also encourages further collaboration coming in the petrochemical feedstocks and strategic decarbonization. Now, for the company, two important positives also come out from this. First is, of course, absorbing the global volatility in the prices, and also the overall margin profile of the company is expected to go up. Now, this tie-up is also providing trading for LNG parcels as well as accommodating their growing captive needs for the company itself. And the company is also at an advanced stage of actually tying up the regasification terminal as well with the gas line connectivity as well. Now, Equinor itself is a very large player and a leader in the oil and gas sector, and importantly, this would be one of the largest deals signed by Equinor with an Indian company, and also importantly, the gas will be mainly used as a feedstock for production of ammonia.
Okay, so an important development, that 15-year deal will definitely give a lot of visibility to the fuel supply agreement, so that's the positive. But Devin, within the entire chemical space, there was this rekindling of interest that we had seen over the last few weeks. Are there any names that stand out to you within specialty chemicals or other arenas as well?
Well, I think in the last 2-3 quarters, the challenge has been on the input cost side, and most of the companies carried the balance sheet inventory of a higher cost. Even though systematically one has seen the sliding down of the raw material cost for them, I think that benefit is now getting started as far as I think most of these specialty chemical companies are concerned, as we gather, be it UPL, be it Deepak. I think they are all basically getting into that mode where probably the stability in the price along with the stability in the input price is now giving them the advantage of both the demand offtake as well as I think margin protection. In my viewpoint, I think the commodity nature of business probably would demand a very careful look as far as I think the forward path is concerned. Some of the companies remain distinctly clear and positive in the business model, and that could include the likes of UPL particularly, where I think they have seen the worst of its business. Probably I think things are likely to remain better in not in current year, but maybe the next year's financial year starting. I think things should relatively remain better. So that's one area where probably I think we look at. Otherwise, I think there are other companies which are in small pocket in the niche areas. They continue to operate, likes of Anupam Rasayan, likes of Ami Organics, likes of Lakshmi Organics. I think these are some of the companies in different pockets in which they are operating. they remain relatively, I think, more stronger play. Even likes of PI industries, I think, would remain probably, I think, relatively more stronger play going forward as we see it. So I think one will have to remain relatively more selective in picking up these businesses in the portfolio.
Okay, fair enough. Meantime, Naresh, just comment on the charts, just tracking the kind of 1 month move that we've seen, and names from the entire oil and gas basket, OMCs as well, stand out. A BPCL, for instance, or an Oil India, even something like an MRPL has run up 62%. How are the charts looking?
So, in terms of refiners like MRPL, Chennai Petro, the stock moves have been pretty large and expect a consolidation time to take some profits off. The other OMCs, the breakout is large if we look at a longer term basis. But the near term movement also, say, for example, BPCL has gone up from 350, 400 levels all the way to closer to 680, 690 levels. So that's been a 100% move over the last 4 months. So after such a move, a pause would be normal. But then if you look at a longer term chart for the last 5-6 years, the last two times it topped out around 550. So that remains a major breakout as well as a support zone. So we want to be buying this stock, which is a multi-year breakout closer to 600 odd levels. Whether it comes there is a difficult task, but it remains a buy on dips closer to 600. Same is the case with the IOC, which has also seen a strong move. Same is the case with HPCL. You want to be buying on a 10% correction from the top, 10-15%. We've just seen a 3-4% correction as of now.
Okay, so that's the take coming in on some of the oil marketing companies. Just wanted to put the spotlight on ONGC as well, since we're talking about that space. Citi has actually opened a 90-day positive catalyst watch on the counter. They've increased the target price to 305 versus 285. They talk about how the crude production is expected to show momentum in the fourth quarter of this year. The gas production ramp up is also likely, and all of this means that there could be an upside to the gas pricing as well. And all of this, of course, augurs well for the company's stock price, and that's why they've opened a catalyst watch, which is positive, and the target price is almost 100 rupees, actually 50 rupees higher than the current market price for ONGC. But shifting focus to Whirlpool now, there's a large trade which is expected to happen there. They gained 24%. The stock always used to trade at very expensive valuations despite not getting supported by the fundamentals and earnings performance, because the float was very low, right? 75% was held by an MNC. It was only 25% in the market. But now it seems like that's expected to reverse and 24% will come into the markets. Do you think this will lead to the real price discovery of Whirlpool, and that would mean a significant derating?
According to me, I think the business has to catch up for this company. I think on one side, we have seen the domestic players playing a significantly large role in taking over the market shares. We look at, I think, the of later entrants like, I think, the Havels, the way in which I think they've been taking over the market share in the white goods. Along with that, I think the others ones like Voltas and others. I believe that I think this is one area where probably I think this company has missed out. Not completely sure whether I think they have got a case here, I think, to expand the size of the market. Though the market remains extremely potential because higher amount of discretionary spending in the hands of individuals for the products, I think white goods products, if they are manufacturing. I would think that I think some strategies probably will have to get corrected, and that's where I think one would train the focus on management. I don't think that immediately infusing the liquidity by way of selling the stock and allowing the market to discover the price, I think would make too much sense. Maybe I think in the short term, the market may remain slightly euphoric, but over a period of time, I think ultimately fundamentals in the working of the company would matter.
All right, Devin, good to have you on board. Thanks much for taking time out and joining in with your take on the markets. Let's move right on then and put the spotlight on the pharma majors, Biocon and Glenmark. They're going to be in focus on the back of the brokerage notes from Jefferies as well as HSBC, respectively. While Jefferies has a bearish stance on Biocon, HSBC is pretty positive on Sharad. Let's find out what each of the brokerages have to say with Sharad, who joins in. Sharad.
Well, HSBC has come out with its report on Glenmark Pharma, and they have upgraded the rating to buy, and this is from hold, and also the target price has increased from 960, it has gone up to 1100 rupees per share. Of course, the third quarter was disrupted on the back of the restructuring of the distribution model, but there are certain positive points which they are focused on, especially the first one being the recovery in the Indian sales, and also because of the lower R&D expenses, that has also aided the margin. So overall, going ahead, the margin outlook remains very strong, and there are multiple margin drivers also going ahead, which could also be a further re-rating point for the stock. Also looking at Biocom, Jefferies has come out with its report and they've seen that continued challenges would be there in the year 2024 itself, and they have downgraded the stock to underperform. The target price set at 250 rupees, and still at the current levels it's at unfavorable risk to reward ratio. Apart from this, the brokerage has stated that the earnings downgrades is expected to kick in because of lack of new launches coming from Biocon, and a weak FY25 outlook is coming from Syngene as well due to lack of major manufacturing contract wins. And of course, free cash flow generation has also been on the weaker side. So in one side we are having kind of a bearish view, and the other side there is a bullish view for both the pharma stocks.
Taken. Thanks so much, Sharad, for putting that into perspective. But Mr. Sanjeev Bhasin, as always, joins us on the show. Mr. Bhasin, I wanted to begin by asking you about Zee Entertainment, and that stock continues to entertain, right? This morning, again, there are reports coming in which suggest that the merger talks are back on the table, and probably we'll hear more updates in the next 24 to 48 hours. What should one do, whether an investor or a trader?
Very good morning to you, Anisha. Lovely news you broken out, and even I have been smiling cheek to cheek and hopefully being paid out for both Paytm and Zee being contrarian. We hold both the stocks, and we told you you cannot get entertainment in India of the size of Zee at 14,000 crore. I think there will be a huge breakthrough, and if it does become an MNC, then God willing, 350, 400, 500, anything is on the cards. All you have to do is go through this next 48 hours. I'm very, very positive. I think there is whatever the differences are, both the parties are sitting down. We will leave it up to that. But like I told you, you were seeing that there was accumulation from smart money, and I think it's a throwaway price 180. So please, if you are seeing and you are waiting for the news, go ahead and take a call, buy some stocks now, and I think that you'll be richly rewarded. If this MNC play goes off, Anisha, it will be a game changer for the media space. And I think Sony's presence will be very, very well advocated in the stock price and the results forthcoming from it. So as a disclosure, Z is in our portfolio, and it's been a little painful, but I think after pain, gain is going to be there very much on the cards.
Oh, yes, indeed. And now with Zee and Sony huddling right back again to salvage the merger, the talks have been revived. We'll just have to see how this epic drama, I think, really plays out. But let's also get in your thoughts then on the Kotak Bank rejig that we've seen. How is it that you're reading into all of these developments, what it could potentially mean for Kotak Mahindra?
So, Avan, clearly Kotak has been one large cap bank which has disappointed. We were optimistic given that they are in all businesses which are doing exceedingly well. And I think this the lacuna after Uday Kotak's exit has left unnecessarily pessimism. The results, the numbers, the net interest income, margins all seem very, very steady. They've been one of the best profile as far as lowest NPAs. I think the reject should do well. Also, Avan, as a disclosure, we think that private banks now are in a much better space to grow rather than some of the PSUs. So take some money off the PSUs. We are not saying totally exit, but get into some of the quality large cap private banks. And that includes HDFC Bank, by the way, which clearly clarified that they are not going to give in to lower NIMs just for the sake of deposits. There will be a gradual incline. And at 2-time price to book, I think HDFC Bank now seems the large cap which can move. We are optimistic on all three, HDFC, ICICI and Kotak.
Okay, positive on all of these private banking names, clearly value on the table. But Sony, I wanted your view regarding Reliance Industries and Zee Entertainment, both the stocks. For Reliance Industries, also wanted to put on board the brokerage note that we have got this morning. That one has come from Jefferies, I believe. They are talking about how peak of the capex is behind, and from here on, they are expecting that the returns are expected to improve for the company. They're also talking about how the global diesel demand remains very resilient, and that's the reason they've gone ahead and raised the EBITDA on the O2C strength that we have seen, and the stock trades cheap relative to Nifty is the view coming in from Jefferies. Their target price now stands at 3,140 rupees. What's your target, Sony, on Reliance, and any recommendations to dabble into Zee?
I think, Aisha, Reliance, if we can look at the options chain, it has taken multiple support from 2900. And as of now, also, if I check, there's a lot of aggressive put writing that has happened on those strike prices, such as 2900, 2920. So any dip that we can see in Reliance towards 2900 remains a good buy and an opportunity to just reinitiate longs from those levels. From the target perspective, it is definitely looking good on charts as well and can head towards 3000 to 3050 on short-term basis. But of course, from a medium-term basis, it's quite even stronger, and you can see even higher targets of 3200 plus. But as of now, I think any dip that you see from 2900 onwards should be definitely bought. It has multiple support in the range of 2900 to 2850. There's technical and derivative support, so it's a definite accumulation and buy on dips stock for higher targets. Talking about Z, I think Z, we can see that it is definitely consolidating as of now. The lower end of the consolidation range is somewhere around 175, and then 190, 195 is a resistance. So maybe, it's just the impact of the news that we can see the consolidation is happening. The moment it's able to cross 195, 200, it can definitely bounce back to higher levels of 220 odd levels. So I think one can continue to hold in case they have entered at lower levels, but, definitely keep a strict stop loss of around 175 on closing basis.
Okay, that's the word on Z and Sony as well. Z, surely one we are keeping an eye on. But Sanjeev sir, good morning, and this is Vinny joining in as well. What I want to talk about is GCPL as well. The numbers have been good this time. They've outperformed in terms of the FMCG pack. Now, yesterday they came in with an announcement in terms of the reorganization of their East Africa business and the divestment there. How are you looking at GCPL overall in the FMCG pack? Do you think, given that the strong earnings are going on, focus on, leveraging and moving towards better profitability is something that could work out well for them?
Yeah, good morning, Vinny. So actually from the last 2 years, this has been one of our top picks and it has outperformed the FMCG basket. We've been close to 650, 670, and we were recommending very strongly that their Malaysian, Indonesian market growth will be in high double digits. And that is how it has played out. I think that they are focusing well on a lot of models abroad. And given the franchise which they have, I think they have a huge market share to gain over there. Yes, there will be a little bit of EBITDA loss because of expansion, but I think the brand is very well enriched. I would not give a buy here. As an alternate, I think Dabur fits the bill perfectly. This stock has not done much. The management is very, very optimistic, and I would rather take some money off Godrej Consumer and add into Dabur. Both these stocks are in our portfolio. We have book profit in Godrej Consumer. But we are now more bullish on Dabur as a FMCG play. Also, we think FMCG now will start to rear up as rural incomes go. You cannot just have motorcycle do well. I think the other basket of staples is here now to perform. So Dabur would be my top pick over here in the FMCG basket.
Okay, fair enough. Meantime, let's also get in your take then on Coal India, Sanjeev. What is your outlook given that now a lot of brokerages have come out with their view on Coal India, saying that valuations are fair but dividend yield still remains a little bit elevated? How are you looking at the news with respect to the drop in the e-auction premium?
So Avan, it's difficult to call a stock which has been a multi-bagger from 220, it has gone to 450. Don't chase it. All the dividend yield, good news is in the price. The best of the earnings are priced in. Thermal capacity is also very well priced in as far as power goes. I would take some chips off the block in a large part of the PSU basket and try and get into other names. Like I told you, private banks, insurance, SBI Life is something which is our top pick. We like Dabur and a whole host and Z. Why not take a little bit? So I think this is a good time to take some money off the PSUs. You will be leaving maybe 5-10% off the cuff, but you are encashing some of the large gains which these companies have had. They are large commodity players, and yesterday they did sound that their output is now on a decline, which I think should see some amount of consolidation, if not correction, in the near term.
Okay. Sony, what I also want to know is your take coming in on these new age tech companies as well, especially Zomato. That's seen a very good run up as well. Today also, in terms of announcements that have come in from that side, Blinkit is doing well. What's the view on Zomato now, even after the run up, still looking attractive?
I think when from years, Zomato has been facing some resistance on charts around 160 odd levels, and we believe that only if it's able to cross this level, you can see some further upside towards 170, 175 plus levels. But in case it's not able to cross that today, so you can see some minor dip happening towards 150, 145 in the range. So that dip is definitely, if it's holding 145 on closing basis, then the dip can be a good opportunity to reinitiate your longs again. It's a good support as of now. However, it's again it may bounce back again to 160. So it's in the range that it's happening, and you can definitely take your advantage of the range play. I think from 145 to 160 seems to be the optimal range as of now.
Okay, fair enough. Meantime, Sanjeev, let's also get in your thoughts on the entire domestic tourism boost, how you look at that really benefiting companies and the entire travel sector as a whole. What do you like?
So we've liked Indigo, we've liked Indian hotels and the entertainment side. We like Ashok Leland, which is the largest bus carrier, as a corollary to that. But you are seeing across the board, apps which do the bookings, the other conduits of that, Ease My Trip, Make My Trip, all those do extremely well. Large part of that is built in the price. There are no free lunches. Ashok Leland would still be my top pick. But Avan, I want to stress one point. There is always this provincial overhang of over ownership of stock, maybe like an HDFC. But once you see clarity on numbers, you see clarity on the management and the guidance, where they are not ready to sacrifice NIMs and margins, and the profitability still remains on a steady wicket. They've also guided on the LDR ratio, which over a period of time will decrease. I think this is a quality time where you want to be in less of the riskier areas and in steadier businesses like HDFC, which may not do very much for the next 1 or 2 quarters. But then you never get in 10 years an opportunity to buy 2-time price to book the 5th largest bank in the world. So I would be very, very steady on SBI Life, HDFC Bank, Dabur, and say Z. These are 4 or 5 names which are pedigree in their names. The broader market is looking overbought and little frothy. Be watchful over there.
The broader market surely looking a bit frothy as well. But Naresh, in terms of Whirlpool India, what's your view coming in the charts and technicals? This has been a clear underperformer also when you look at it in terms of 6 months as well. Nothing exciting that has happened. Now Whirlpool Corporation will be selling their stake as well. So in terms of charts, what's the view looking like for Whirlpool India?
So if you look at it technically, it's been a terrible chart in the last 2 years. From a top around 2700, the stock has corrected to 1330, almost a 50% drop. And every recovery over the last 2 years has been sold into. And now it is closer to the lows it made in 2020. So that is the worst part. Very few stocks have actually gone and broken 2020 lows. So in such a case, I would expect it to remain sideways unless we start breaking out above 1500, 1600 levels. So for now, the technical view remains weak only.
Okay, meantime, let's just check in as to what were some of the movers in yesterday's trade. And you had a lot of support coming in from some of the heavyweights as well, the likes of a Reliance Industries. You also had ICICI Bank, which performed, and there's some positive brokerage views as well on a Reliance Industries. Do you believe that, Sanjeev, it is going to be some of the large caps that will lead the way going into the next leg of the up move, if at all we were to see that play out after maybe a phase of consolidation?
Yes, Avan, and clearly Reliance has been at the forefront, along with maybe a TCS and I think now it's about time HDFC Bank added weight to the Bank Nifty. I think Bank Nifty's earnings, the Bank Nifty support, the Bank Nifty's underperformance should be coming to an end. If we get past this 46,500, 47,000, then I think Bank Nifty will lead the way. It is now the time for HDFC Bank to give support to the market. Both HDFC and Reliance, as you are aware, they have a large weightage on both the Nifty and the Bank Nifty. And these are the 2 stocks actually which we are very, very confident of outperforming.
Point taken. So those are the stocks that you're quite positive that will outperform. Just addressing the news flow on Tourism Finance Corporation, seems like a large block deal has happened on that one. Almost 13% equity has actually changed hands. It's a fairly liquid counter in any case. So seems like there has been a bit of a block which is coming from a few consortiums together, because I can't see any single holder having 13% stake. So we'll wait by and see what exactly has happened there. But in terms of the other news makers, yesterday's PB FinTech move was quite interesting, given that gain of almost 9 to 10% on account of the composite insurance license that they got. Mr. Bhasin, I know your view on Paytm, but what's the view on PB FinTech, even delivery for that matter?
So, Anisha, we hold all three in equal quantity, slightly more on PB FinTech and Zomato because of the gains. And we intend to hold that basket. Paytm, as you know, has been an underperformer. So we are waiting for some more color on that. We maybe the burst is priced in, but it will take some time before you digest all the news flow and the weak hands move out. PB FinTech is one of our star performers, but at 1,000 we will not chase it. We will just be with it. I would also like to comment on one more news item which people may have missed. Vedanta is looking to sell some of its steel business which it acquired about 8 years back, and that is now going to be sold at a substantial premium. The talks on the paper are that one of the ex-ArcelorMittal person is buying it in a fund, and you know that Vedanta's underperformance is there because of the huge debt overhang. I am of the view that in the metal basket, Vedanta is a dark horse which can be a huge outperformer given its presence in all businesses from oil, gas, thermal power, and the other commodity basket, including silver, platinum, zinc, aluminum, and copper. And if this news flow is good and the debt is reduced, then this stock can be re-rated on the upside. As a disclosure, Vedanta is something which we are accumulating, and we are very, very optimistic on the metal cycle.
Right. Soni, I want to talk about some of these retail names as well. When you look at it, whether in terms of trend, that's seen a strong move. ABFRL, how do you look at that? As well as in terms of Aditya Birla Fashions, anything that, you're finding attractive on that front? Or, would you still look at trend in terms of this retail SPAC?
I think, Vinny, from all these stocks, definitely Trent will hold out to be the best pick, and it has seen very strong breakout recently on charts. Even from current levels, it has closed above 4,000 yesterday, which is indicating that it has given a fresh breakout above the 4,000 level. And the closing is just confirmed that it can head higher towards 4,200 in the coming days. So I think this definitely would be a good pick, and it has formed multiple support. But from a short-term trading perspective, 4,000 to 3,960 is a very strong support zone. As long as the support zone is respected, it can head higher towards 4,200. Talking about ABFRL, definitely it has also moved a lot, but the correction recently has just seen it has gone below the 240 odd mark. So I think it may consolidate here for some time between 230, 225 on the lower end and 240 on the higher end. So I think it's just not that confirming, it can move as of now. So I think trend would be a better stock, just place your bets on.
Okay, point taken. So that's the view coming in on some of these retail stocks as well. In the meantime, autos as a pack has been doing really well. Mr. Bhasin, what's your view on that, and where does the preference lie? Two-wheelers, four-wheelers, within that as well? Tell us your top bets.
Maruti, Bosch, all doublers. I still think there is more steam. Tata Motors, and my underperformer Ashok Leyland. I would still put money on Ashok Leyland given the ascent into all businesses. The bus market is growing rapidly. They are 53% market share in the bus market, third largest in the world. And I continue to be overweight Maruti. I had given a target from 8,000 at 12,000, and little did we know it will be there very, very soon. Same is the case with Bosch. 25 has now become 29,000. 32,000 is very much on the cards. The underperformer or the outperformer or the underperformer has been Ashok Leyland, which I think can catch up. And Hero Moto also one of my top favorites at 5,000. There are no free lunches now, Anisha. So do your stock pickings. As a disclosure, these have been in our portfolio from some time and relatively outperforming. But we think auto and real estate are something where you should take some chips off the block.
Okay, Mr. Basin, thank you so much for joining in with us this morning on ET Now. But we also managed to speak to Gautam Duggar, Head of Research at Institutional Equities at Motilal Oswal, in terms of the auto sector, in terms of earnings. What is he expecting in terms of outlook there? Listen in.
FY24 is the first year of a big auto earnings growth, right? We have seen auto earnings doubling in FY24, which is why a year and a half back we had gone overweight on auto from underweight. Having said that, now we are entering FY25, where you have to contend with a very high base, and management commentaries on auto has been very mixed. Nothing taking away from the great delivery for last 5 quarters in a row. In fact, I would go one step ahead and say auto has been the best performing sector on earnings in our coverage universe, 5th quarter in a row. I must also point out that FY25 can be the year of normalization for auto. While it will remain healthy, but the quantum of growth that you might see will not be similar to what you have seen in FY24, because the outlook on various segments as far as volume is concerned is very modest. Anywhere between 4 to 8% volume growth. CV, a lot of managements have highlighted that the growth is moderating there. The best performing segment will be two-wheeler insofar as volumes are concerned. And then you are also contending with a high base of margin in FY25. So our expectation for FY25 earnings growth is about 10 to 15%.
Okay, so that's the latest coming in as far as auto sector is concerned. Just putting the spotlight on Minda Corp as well, because yesterday we pointed out how one of the big HNIs could be the seller in the block deal that happened yesterday, and the buyers include a lot of fund houses, and now we understand that the likes of Motilal Oswal, etc. have bought that stake, so that stock stays in focus. But on that note, we'll let you, Mr. Basin, go. Thanks so much for making time and speaking with us. In the meantime, let me take it across to the technical experts as well, Sony as well as Naresh with us to talk to us about their mid-cap ideas. Naresh, you go first.
So that would be a buy on no-sell. The stock has been range-bound for the last few months. After breaking out about 255, it has made multiple attempts around this 255 bottom and 288 to 90 top. Yesterday saw a large volume breakout above the 290 mark. So this could see some momentum for the short term. Stop loss at 277, target price of 340.
Okay, so that's the bet coming in from Naresh. Sony, what about you? What's the top mid-cap idea this morning?
So I'll continue with Cummins. I think it still looks good, and with the same levels and targets, of course. The pre-opening is also looking quite positive for Cummins. The second idea that I can pitch in for would be Laurus Labs mid-cap. I think Laurus Labs is given a closing above 400, so that's a good support as of now. So you can buy Laurus Labs with stop loss of 400 and target of 420.
Okay, let's move on to some top headlines, and spotlight continues to be on fintechs on the back of regulatory actions against payments giant Paytm. According to the Economic Times report, Finance Minister Nirmala Sitharaman is slated to meet the heads of fintech firms along with the Deputy RBI Governor along with other top officials on 26th of February. Now, the meeting has been called to reassure the fintech industry that the sector remains a key priority for the government and allay any concerns in the view of RBI action. Meanwhile, deadlock between the centre and the farmers continue as farmers rejected government's proposal on MSP guarantee for 5 crops. Instead, demand a 5-year guarantee for all 23 crops. Now, Farmers Union will resume its Delhi Chalo march from tomorrow. Minister Narendra Modi will inaugurate the world's highest railway bridge in Jammu today. The 1.3 kilometer long rail bridge on the Chenab River is 35 meters higher than the Eiffel Tower in Paris. Meanwhile, the PM will also inaugurate 3 more IIMs, including Jammu, Bodh Gaya and Visakhapatnam campuses.
Meantime, the Supreme Court pulled out the central government over denying consideration of the permanent commission to a woman officer serving in the Indian Coast Guard. The top court has criticized the government's patriarchal attitude and questioned its vision and advocacy of Nari Shakti. The division bench stressed that the Coast Guard could not be ruled out on the criteria when the Army and Navy have fallen in line with granting permanent commissions to women officers. And meantime, some stunning visuals as there's been fresh rainfall that's adorned part of Jammu and Kashmir. Tourists have seen rejoicing in the winter wonderland. The Met Department has actually predicted more snow in Jammu and Kashmir, Ladakh, Himachal Pradesh as well as in Uttarakhand.
Okay, so that's the latest in terms of the national and international news and some of those very pretty sights from parts of India. But just taking stock of some of the buzzers before we go across to Sharad, because the pre-open rates have settled as far as the Nifty and the Bank Nifty are concerned, and even Sensex for that matter. It's a bit of a mixed view coming in because Nifty is suggesting a bit of a decline at start. Very, very minimal. So let's, just see how it really opens, while Sensex is suggesting a mild green to start the trading session with. Paytm is one stock which is expected to stay in upper circuit yet again. Yesterday we had seen 100% delivery come by for that stock. In fact, it has been consistently improving for the last few days, the kind of buying that we are seeing on that stock. So 5% higher. EID Parry is the other one on my radar, and that Deepak Fertilizer news wherein they have tied up for 15 years for an LNG supply agreement is also boding well for the stock price today, likely to open with a gain of around 5%. Minda Corp, after that block deal that happened yesterday and the names came out in the evening that there are interesting long only funds which have actually participated. That stock is in focus. Z Entertainment, as we said, continues to entertain today. That stock is likely to open with 4% gain. But keep in mind, I think Z Entertainment is in F&O band right now. So be cognizant of that particular stock as well in the trading session. On the losing side, Federal Bank, that stock is down 6%. Remember, we had alerted you earlier that KVS Manian staying back at Kotak Mahindra Bank might not augur that well for Federal Bank, because KVS Manian was expected to be one of the front runners to lead Federal Bank going forward. And now this clarification of sorts happening that KVS Manian is likely to stay at Kotak Mahindra Bank might not augur well for Federal Bank, because there'll be that flux as far as leadership is concerned as to who's going to take over the position there. So Federal Bank can focus on account of that. Take a look at Whirlpool as well, that big block deal that was expected to happen. I'm not sure if that has already happened or not, but nonetheless, that stock is expected to open in the red right now. But these are the buzzers at this point of time in pre-open. But time now to take it across to Sharad as well to get what the khabar is on Dalal Street. Sharad.
The cover on the street in focus is small cap company Apar Industries, and is expected to receive a large T&D, which is the transmission and distribution order coming in from the US market. Now, of course, this segment will be coming in from the cable segment, and the demand revival is expected to happen in the export market business of the company in FY25 as well. And in recent con call also, management had stated that they are targeting volume growth of roughly 25% when it comes to the cable segment. Now, channel checks were also there, where we saw that there are increased inquiries coming from the US markets, and roughly 16% of the revenues are coming as per the FY23 numbers. And overall, this is the result of a destocking phase, which is in its final stages when it comes to the US market. And even the Red Sea situation itself hasn't hampered the US market trade as compared to their other geographies. So Apar Industries would be in focus, as they might receive a larger order in the transmission and distribution segment.
Okay, thank you so much for that, Sharad. But let's move on. And Naresh, I'm going to come to you in terms of Federal Bank on the charts. How is the expectation for Federal Bank? Obviously concerns coming in around news report, but overall, how do you see on the charts Federal Bank?
So the stock was pretty sideways and suddenly saw a move in the last 3 sessions post some rumors. And but if you look at the longer term structure, it has been positive. It has clearly continued steadily. One of the only, say, private banking small names which has actually hit a new all-time high consistently with the trends. So out here, 150, 152 remains a support, which is where you want to buy in a dip if it comes.
Okay, that's Federal Bank for you, down about 5% on the pre-open rates. Soni and Naresh, let's get in your index calls as well and find out what exactly they have advocated as with respect to the position on the index. Do remember, both of them were talking about how the undertone of the market does remain pretty positive. Yesterday was a day of record highs. Divergent views. It's a hold recommendation from Naresh. Soni believes that it's a buy on dips opportunity on the markets. Ditto for the Nifty Bank Index. A buy on dips, says Soni. Naresh believes one can hold.
so that's the lineup for you. Of course, we have a whole host of market experts joining us to talk to us about what to do from here on, because the market was clearly at record high levels yesterday, cooled off materially by the end of the trading session, and looks like to start of the day we might be in a bit of a red situation. But Soni, I wanted your view regarding the IT pack. Have been in the red of late. Infosys, HCL Tech. Yesterday as well, that sector was underperforming, and today as well, even if I look at TCS, etc., they are likely to start on the back foot. Anything within IT that you would recommend as a buy?
I think, Anisha, we can see that IT has been underperforming of late, but then, overall, if we see the broader outlook for IT space, it is sort of a buy on dips, sector as of now, and for short-term trading perspective, of course. If you look at the large weight caps, then, Infosys and TCS have not quite performed as in comparison to Wipro, which has recently seen a lot of traction and a good breakout also. So I think the top pick from the IT space continues to be in Wipro. Wipro has seen multiple supports around 500. So the closer you get to the support of 500, that becomes a good level to buy. And definitely, on the higher side, it can test 570, 580 also odd level. So I think it's a good risk reward ratio when you get to the support of 500. I think that would be the top pick from the IT space.
Okay, a quick take, Naresh, as to how you're reading into the Nifty Bank Index.
So Bank Nifty waiting out for a sustained move on ICICI Bank to give a confirmation. HDFC Bank has created a bounce, not a great follow-up as yet, same way with Kotak Mahindra. So if you can cross above the 47,000 mark, it would be a momentum breakout. But for now, it still remains a positive stance, a hold on it at current levels. And look at it as an adding position if it sustains above 47,000.
The view coming in on the overall Nifty Bank Index. Well, that's the ringing gong of the market open this morning, and let's find out how the markets have settled in. Do remember that we had the US futures indicating that it would be a fairly decent start. After those record highs, it's sort of quiet, and I don't think any complaints with this sideways move. Holding on to 22K, by the way, and for the Infra Pharma. I want to pull up Z Entertainment because I reckon that's doing the heavy lifting in trade within the media basket. Remember, there have been news reports from the Economic Times indicating that the merger talks with Sony are back on the table in a last-ditch attempt, and that stock, no wonder then, is up and away in trade. HDFC Bank as well, do remember the management talking about how they will not be chasing high-cost deposit flows, will be maintaining their margins. The stock pretty quiet yet again, no surprises there. That's pretty much been the mood for all of last year as well for HDFC Bank. Kotak Mahindra Bank, yes, there have been redesignations as well. KVS Menon as the joint MD. And the whole rejig coming in 1% higher on that stock. What's going on as well with an NBCC? They've bagged orders worth about 369 crore rupees, and that stock up a solid 2.5%. Torrent Power will be investing to develop 4 projects in UP, a sum of close to 2,500 crore rupees. Torrent Power as well has started off in the green. Titagarh Rail is on track to start supplying some devices for the train sets, and that stock in the spotlight. Do remember Deepak Fertilizers, that 15-year LNG contract that they've signed with a Norway-based company. That stock is up and away a solid 9% on a Deepak Fertilizers. Minda Corp as well. Do remember you've got you've got Bela Agarwal selling that stake in the company, MFs being buyers. There was a result reaction from CIE. Check in on that one. Margins have expanded, profits kicked in this time versus a loss. So that stock in the spotlight. Whirlpool as well, remember, with respect to that the parent cell is selling stake via the block, and that stock is at about 1292. Sula as well, remember, is in the spotlight too, with Verlin Quest selling that entire stake via the block deal. Anisha, there was which one did we see that big block deal impact coming in?
Tourism.
Yes, TFCI, Tourism Finance Corp. It was, I think, a 13% block that traded hands, and that stock is up in today's trading session. Of course, we'll get in a little more perspective later on with respect to the buyers and sellers of that deal, but 220 is where it's at. Anything else you're spotting?
Yeah, just a lot of movers within the broader markets. PTM, that stock continues to be in the upper circuit, so that's in good momentum. On the losing side, MRPL is cooling off. So after that 18% surge yesterday, no wonder that the stock is retracing today. You also have Biocon reacting to that Jeffries note wherein the downgrade has come by. So that stock is down about 3%. Watch out for Patanjali as well. Stock down another 3%, 4% in the trading session. And Coal India, I was actually expecting a reversal today. Hasn't really panned out. So after that 5% dropping yesterday, the stock has opened with another cut of around 2.5%. I thought the brokerages were a bit more positive on the stock, but nonetheless, that for now is in the red. But Z Entertainment gaining ground. Deepak Fertilizers actually now up 9%. So when we started off the day just a couple of minutes ago, it started with a gap of around 5% that has managed to gain ground. And then EID Parry is the other one. NBCC2 as we flagged out on account of those auto wins, etc. is in focus. But time now to take first trades with our chartists.